Let's have a look. So we had a big sell-off yesterday. That was potentially, you could say, it was expected. I didn't take the short. I wasn't really interested in local short. It would have been really a really good trade. I said you could take the short. I wasn't looking for it, but it would have been a good trade on that swing failure. And then, so basically I was looking for higher, or I was looking for lower. And effectively, when you're looking at my trade ideas from yesterday, I had this daily level in mind. See that? So I didn't take the short as we lost this weekly level and this previous bull market high, all-time high. Good morning, Hyan. Hyan, yeah, well, I'm gonna have a good slurp. I'll do it after this. So I wasn't looking for a short as we lost that weekly, because it's a weekly and sometimes it does that. I was actually looking to short the loss of the daily, so that's why I had my entry down here with an invalidation back there. So I was looking for some kind of resistance, and you just can't see it. There's no resistance. As the price came back, it came back up, and actually it found support. Okay, and I said that that was actually very bullish pattern, hence the long. So I took a long. So I took a long as it came back up, and my invalidation was underneath this low here. So let me hide the short now. So as I saw the price come underneath it, I just waited. Once this cluster of market structure had been formed, and as the price came back, and actually as it came back above this yellow line, that was what I was interested in, like a failed auction, but with the price coming back above this previous pivot low here. Then I took the long, and I put my invalidation underneath these lows, and I've taken profit now. I've taken my 1%. So it moved enough for me to risk 1% and take 1% in this trade. And as you can see, the price is pulling back, but that's why you take your profit. You take your profit because now I'm sitting in a long. It's not my full position. It's a runner, but I can always re-add. I can recompound my 1% if I get an invalidation. I'm looking for an invalidation. Always looking for an invalidation when I'm taking a trade. So this price action gave me an invalidation, and look, it's kind of done what I wanted, and therefore I took the trade, and that was a successful trade. I only took one trade yesterday. Oh, actually, I tell a lie, I took another trade. I'll go into that in a second. What did I want to show you? And then I just did I post it? I don't think I posted it. Right, never mind. That's fine. So that was quite a good plan. I don't know if anyone took that, but it was there. So that was my trading idea from yesterday. And now what I'm looking at, the local price action, I'm seeing that we're in some sort of megaphone pattern. So a megaphone pattern is higher highs and lower lows. We've come in to make our lower low now, and now we're heading up to potentially make a higher high. Let me just pull up a megaphone for us all so we can familiarize ourselves with the megaphone pattern. So there's a bullish megaphone and then there's a bearish megaphone. I'm going to copy two images for us to see. This is the megaphone pattern. And then I'll pull an example that looks quite pertinent to this price action, so we get an idea of what we're looking for. I just need a good image though, that's the problem. A lot of these images are very small. Give me a second, if I find something decent. It's amazing how rubbish the content is sometimes on the markets. Right, I found a relatively decent image. I had to search for a lot. So this is the idea. So a bullish megaphone, you come into the megaphone, you bounce, you make a lower low, you make a higher high, you make a lower low, you make the higher high, but the higher high extends, back test the trend line of the megaphone, and then off we go. So it's a bit of a continuation, a bullish continuation pattern when the price comes in from the lows, and in reverse, if the price comes in from the highs, you make a lower low, you make a higher high, low low, higher high, you break the bottom, you back test the trend line that's broken, and it's a continuation. Basically, it's a continuation pattern based on the direction of traffic, based on where the price comes in. So based on this idea, we're looking at a bullish megaphone, and you see what I'm looking at now. You've got the price coming in from the lows. Maybe that's the, I mean, this is just an example. It doesn't necessarily have to be exactly like this, but it does look like we're forming some kind of megaphone at the moment. There is also something else you can get from this, and I just want to share it. So there's two things you can get from a megaphone. It doesn't have to be a megaphone, and I'm going to explain that to you now. So this is the beginning of something that could be forming, but there's also something else that can be forming, and I'll explain that to you now. Good morning, War Child. So this is a megaphone pattern in a real life price action, and you can see clearly that you can actually hit the top line once, twice, 3 times, more than just twice, according to this. You see it hits the bottom trend line once, twice, 3 times, 4 times, 5 times, 6 times before it actually breaks out. What's important for the continuation is you can kind of see it here, a little bit of volume and a back test. Okay, and then you'll just get a breakout to the top, to the upside, because that just confirms this whole structure of support, and then longs start to enter. So that is the idea of a megaphone. And so the only thing you have to be careful with a megaphone is it could also become a diamond. Okay, so we have that kind of potential here, and a diamond, that would be your pivot. This would be your pivot, and you could potentially form, if now we start making lower highs and higher lows, then actually we're in a diamond, not a megaphone, a diamond. And a diamond in the context of where we are is bearish. So let me pull up a diamond pattern now. Pattern trading. I'll show you the pattern first. So again, it depends on how you enter the pattern. If you come in from the lows, you're exiting back at the lows. If you come in from the highs, you're exiting back to the highs. Eventually, once you put in your mid pivot, then up to that point, you're making higher highs and lower lows. And then after that point, you're making higher lows and lower highs. And a diamond pattern is a reversal pattern. It's not a continuation pattern. So a megaphone is a continuation pattern. A diamond pattern is a reversal pattern. And right now, we don't know what we have. We're not sure. It's you can't tell, because we've only just put in our midpoint. Okay, we'll know as we approach the highs here to see whether we make a lower high or whether we go up to squeeze. Okay, if we go up to squeeze, then we're probably looking at a megaphone. So that's a diamond pattern, and then let me show you what it could look like in price action, in real life price action, just so that you understand what it could look like. Something like that. This is on a GBP USD, but you see it can you're basically making higher lows, higher highs, low lows. This isn't great because this is a higher time frame, so we're not looking at a higher time frame. Like I said, it's not what I can find online isn't great. Let me see this one. There's lots of examples of how to trade these patterns. Okay, and I'll tell you the best way, in my opinion. So we're potentially looking at two patterns here. We're potentially looking at a megaphone, and also we're potentially looking at a diamond. Now that you can see it, I'm going to delete the triangle. And zoom in a little bit. And then what you want to see now is whether we put in a lower high or not. Okay, it would be nice to get as high as possible before we put it in. Like I think right now it's a bit low. And also if we are making a megaphone, we have to make a higher high now. Basically we have to make a higher high and squeeze those highs. It's not the best looking megaphone because we have these points. This one kind of is off. I'd kind of ignore that one, and then this one is off as well, so I almost would ignore that one as well. And if I draw it a little bit more megaphony, to ignore those and just use trend lines, then probably this to there, and then probably this one to here. Maybe something like that. That's kind of more of a megaphone with a fake out to the downside. And effectively, if you form a diamond, if this is the pivot, then this would be here. And so actually it's a little bit more sharper because that would be your pivot. You kind of have to ignore that. So I actually prefer megaphone to diamond right now, but anything could happen. And what you could actually get is if you get a swing failure up there, then the pivot's actually it'd be more like that. If we suddenly go up there, swing failure, then it could be, it could be like this. It could be a little bit wider. This could go lower. Different things could happen. That's basically, but we're trying to form something, and we just have to see what it's forming. I kind of prefer megaphone. Okay, that's kind of what I prefer right now. And so I'm just going to go with that idea for now, but I'm also just contemplating a diamond. All right. For this to pan out, I mean, you really have to squeeze this top. That would make sense because Yesterday on Binance, you had $2 million worth of shorts. So a lot of short centered, and you had shorts coming into the lows. There was absorption, and now we just trapped shorts were getting trapped in the bottom of this this drop, and then they were basically squeezed up. And so actually there isn't any bearish continuation at the moment. You're getting the bearish impulse, but you're not getting the bearish continuation. So that's bullish. When the bears are failing to continue, that's bullish. You know, when the bears are not succeeding after so much selling, look at that price. Look at the volume and the price. Increasing in volume, decreasing prices, and look where we are now. That's not bearish. That's actually very bullish. So I'm thinking more bullish now than bearish, just simply because of how much volume came into these lows and how the price is just pinged off the bottom of this range. So that's kind of my idea of the price. If I just do a volume pool now, I'll hide the my levels. I'll put that into a group and I'll call it megaphone, and I'll come back to that. I just want to, when I do a trade plan, because there is a trade plan. So let me just do a volume range pool to see if the volume has changed. Okay, the value, okay, this is interesting. So you can see a change now. So I've done a new volume pool on this whole range. The value area low has now moved up. It's shifted up to this SR flip, just above this SR flip. Okay. The point of control is pretty much where it was. And now the value area high has moved up too. All the way up to there. You still have a high volume node here, which is where we had a rejection yesterday. You see how the price almost came into it perfectly and got rejected. So that's why these high volume nodes are very important, and they're very powerful as well. And then obviously what we can see here in this volume profile is that we do have one underneath us as well, slightly here. You see how in this whole volume profile it kind of sticks out there. That becomes your high volume. So in this whole mini profile, you have one node, one area of interest where there's highest volume. Okay, so that's how you can pick out the high volume nodes. But the best, obviously the best one is going to be the point of control. That's, look, you can see that's your highest volume node, and then within this cluster of volume you have lots of high volume nodes, but I'm not going to mark those out because we'd have to lose this this lower range, this lower part of this mini range. I think that's quite bullish. For the value area to go up, that's quite bullish. The price is still above the point of control, so that's quite bullish. We are in the highs of this range, but we have tested some levels into the upside, and the price is still in the highs. So that's kind of what you want to see. You want to see the price continuously test the highs and not to fall, to be still in the highs. And so after we've had this breakout on this inverse head and shoulders, we haven't had a crazy breakout, so we're into resistance, and that's the reason why. Why does that do this? Right, I'm gonna have to refresh my screen because I can't undo, and it's really frustrating. And I know what I have to do. I need to refresh this. Give me a second. Let me just go back there. Okay, that's better. Hopefully that's better. Right. Right, so we can delete that volume profile now. We'll just leave it for tomorrow. There's nothing really much to tell except that, yeah, nothing really much to tell from that. I can hide that now. Let me have a look at the daily candles as well. And so you can see that's quite interesting. So we broke above the previous bull market all-time high. This red candle was the test. So we've back tested the previous bull market all-time high. That obviously corresponds with a weekly level and a daily level. So we are on support right now, and this is, if this holds, there's no reason we don't go up. As long as this holds, which it is, it looks like it's holding. It looks like we want to go up. But as you can see, look, you can see here, the highs are getting higher. And so that's also very, you've got to be careful with that, because here, look, the highs are getting higher, and then you had a sell-off. So if you keep on squeezing and failing to go up, eventually there'll be exhaustion, because people will no longer market long the highs, and there's not enough short squeeze liquidity to take the price higher. So eventually that's bearish. So we don't want to be in this pattern for too long. You want it to play out, and then obviously there's only two things that can happen to the price after you break out. It's either up or down, and we just have to have a look to determine what could happen. So I'm thinking we are on support on the higher time frame. We are in a range. We have a local range here. We're above the point of control, which is acting as resistance, so it should therefore act as support, and maybe we'll attack the highs. So I am kind of inclined for higher prices. I'm in a long trade now, and I think you get a nice back test of this point of control, you could probably long. But unfortunately, you're in the middle of a range, and so anything here is a scalp, and you'd have to have a wide invalidation, so it would literally be a scalp. But effectively, anyone who's scalping would try and capture the price at the point of control, the value over low, and try and trade it back to the upside. I'm not doing that. So for this megaphone to play out, so I'm contemplating a megaphone and a diamond. I think a megaphone is going to be easy to see, because for a megaphone, what you want is you want the price to just go up there and back test the top of that trend line that's broken. Probably, I think you can kind of ignore that one. I prefer the first one than this one. And then that you could potentially long there. So you're long in the highs, basically. How would that look with the all-time high? Let me have a look. Okay. So you're potentially longing the breakout, the back test of the breakout, and then you're attacking the all-time high. Where you also have a short plan, a short idea as well. And you have a daily level there too. So, okay, there's a few levels of interest. Look at that. So you're into resistance, so that's the problem with that trade. you're into an untapped daily level and you're into the value area high. I'm not crazy fond of it. I think it'd be a lot easier to long the lows than the highs. But that is the trade. And then what you don't want when you take that trade is you don't want to find resistance and then fall back in to the, that's a failed pattern basically. You have a megaphone that's failed, and if that was to happen, you could short that because you have your invalidation. It's that little bit of market structure that's been created above that trend line break. I think that'll be a safer trade, to be honest with you. A failed megaphone. Reject off the daily level. Come right back underneath the trend line and sell off. Be a lot safer. The long is very easy to take because you could just have you take the back test of the trend line, but the problem is you're still into resistance. You've got this daily level and there's no reason why we continue. It just depends on whether longs open and whether shorts close, and it also depends on whether shorts there's enough continuation to squeeze the all-time high. And of course, swing failure, the all-time high, you would take a short too. So there's another short potential, and that's just a real simple swing failure of the all-time high. And that would look like this. The problem is you're shorting right back into this daily level. So you're shorting back into support. So actually, probably, even I think that would be more of a scalp to begin with. And then if you lose this daily level, then you can add, and you're probably in a swing. Yeah. If you swing failure, that's a scalp, because you can find resistance support here to continue. It's possible. It's not likely, but it's possible. Swing failure. Find resistance. Lose the daily level. That's your short. So you could short the swing failure. You can add to your short as you lose the daily level. That's your invalidation. The pivot that's been put in. That looks pretty bearish if that was to happen. That would be the all-time high, the current all-time high, and then you would probably target this previous bull market all-time high down here. The long I don't really like, even though it could be quite bullish and you could get quite an explosion. I'm not fond of it, just because you're longing into resistance. It's better to long the lows than to try and long the breakout, just in case you get a rejection. And then obviously the rejection, it would have to be timed perfectly. Like, timing is really important. It'd have to happen like roughly tomorrow. That happen tomorrow, really. So that when you do break this trend line, you're also breaking you're into the daily level. And of course, if you come into that trend line and that daily level perfectly at Sunday at 3 a.m, there's pretty strong resistance as well, because you have a little bit of confidence there. So the short would be to lose that trend line after you reclaim it for a failed megaphone. And then I'm not fond of that long. So in terms of longing, you probably want to try and, if we can get a back test somewhere, come back down here one more time. That's probably your opportunity to long. That actually looks like an inverse head and shoulders. That would probably be the opportunity to long if anyone's looking to long, but you're still, technically, we're still stuck in the range. And usually these ranges last a long time. They could last for days. So you don't really want to kind of have be in a long when you're stuck in a range. This was the best one where you lost the range and you reclaimed the range. That was the best one. So these are some ideas of what I'm thinking about. Let me just put them in my megaphone group and hide it. Now, if a diamond was to form, it's going to be quite painful because everyone is longing for a breakout or shorting for a breakout, and it's not going to come. And I think this is the pivot, this one and this one. And so the next thing we'd be looking for is a lower high. Yeah. It's not easy to short these, but effectively for a diamond pattern, you really want to just short the lower high and long the higher low. And right now we're heading to the highs, so potentially you'd get a lower high, and then as the price works its way back down, you're looking to long the higher low. And you're just a diamond pattern, you just want to trade the range, but you want to try and catch the price at the edge of the range, at the edges. And effectively with a diamond pattern, you're looking at being potentially in the long and the short at the same time. But this is a bearish it's a bearish pattern in the context of where we are now, because eventually it will break out and probably to the downside. That's the probability of a diamond pattern in the context of where we are now. It's like a failed auction. Just kind of so many of these. There's a couple of patterns in play at the moment. Okay, does that clear everything up? Is anyone here? Don't really think there's anything more to say about Bitcoin. Right. I can't see anything interesting. There might be, I just can't see it. The weekly candle is going to form by this weekend. Potentially we're still range bound, you know, and potentially we're forming a flat correction here over the next few weeks. I don't necessarily like we've bounced. Are we going to continue? I don't think so. I think it's more likely than not that we potentially come back one more time to continue. Like, it'd be very weird to just bounce and then continue. We're not seeing like an increase, a crazy increase in volume. It's like a reduction in volume in this consolidation range. So I think it's likely that Bitcoin ranges, and actually that's the most bullish scenario for the altcoins. If Bitcoin was to now be trapped for a while here, whichever pattern is in play. Probably a megaphone would be nice, but you wouldn't necessarily break it out there. You'd probably just go up and there and then down there. I don't know. I think you probably do need to break out. Diamond is going to look bearish as well. That's the problem. But this pattern, if it plays out like this, it could go on to the end of the month for the next week. It could be range bound. So actually, I think this is probably the best case for the alts. And then you will see a sell-off after the alts have pumped by the end of the month. That will happen with Bitcoin. That will be, then you'll be looking at, that will be your A, B, C. And that's probably what you're looking at. And actually, you're now looking at that. I had this harmonic. But now I'm looking at something slightly different. A different harmonic. Let me have a look at that. Not this cipher. Where's that image? It's not here, is it? That's the image. Okay, that's my images. Which one is it? When you make a lower high. So what is it that I'm looking for potentially? I'm imagining a diamond. I'm not imagining a megaphone at the moment. Let's just say that's your pivot. Again, the reason I had a problem with that was because I didn't like how that was so deep. That's why I did it lower down here before. But that would require us to go much lower. I mean, it's still in player. It's similar to the cipher, except I had the cipher up there. It's basically a cipher still. Let's get that rid of that. We're still in a cipher, but the pivot is still, it's not there. If this is a diamond and that pivot holds, stupid. That would be a cipher. Where's the cipher on this image? It's not in this image. Okay. It's annoying. But it says bat here, huh? Which bat? Okay. I can go with bat. They've called it bat here. See that one there? This one here. This bullish bat, XA, B, C, D. XA, B, C, D. If that pivot holds, and this is a diamond, then we're at the C of a bullish bat. Okay? Potentially. And then I'll be looking for a 1-to-1, which is from the A to the B to the C to the D. I'll be looking for a 1-to-1. And then you'll be looking. This doesn't matter. The pivot has to hold. If that's the pivot, that has to hold. That would be a diamond. That would be your pivot. You form your diamond and then you go down. This can do whatever, but it just has to get there roughly at the right time. Timing is really important with harmonics. So let me try and work out the timer. So there's actually a slightly higher time frame short trade in play right now, just based on this idea. It's always safer with these harmonics to take the last point once the harmonic is completed. This is speculative. The actual trade on a harmonic, if this pivot holds, this harmonic's in play, then based on a diamond pattern at the local level, then actually it's a lot safer and lucrative to take the D here. And good morning, Craig. Yes, Bark, Blue Arctic. Yes, I will have a look. It's a lot safer to take this pivot. But really what you want to do is you want to take the swing failure of this one here. If we make that, if this completes, it's a big if, that would be the trade. You're not really trying to catch the low if the price comes down at the right time. You're not trying to catch the low because it could go low. The entry is getting back above there. Then you have your invalidation. Okay. And then you're looking at a higher time frame bullish harmonic. And I think it would probably, if that was to happen, then you're impulsing away. That's probably your C correction done. And then you're heading to 90,000. That would be the trade. There is a short potential here. If that pivot holds, it's a big if. If we're not looking at a megaphone, we're looking at a diamond, then, I mean, that's your trade right now. Really good ROI all the way down, probably to this B. I wouldn't risk it trying to complete. I wouldn't try and complete a harmonic if you enter at the C. You just try and target your, probably this first low here, and that would be, it's actually slightly higher than the golden pocket. Yeah, look at that one. I mean, your take profit's going to be here. That's your take profit, the local golden pocket, and then you're probably targeting this B, not necessarily this lower one, because at any one of these pivots you can get a swing failure and the harmonic fails, but it's still bullish because you just have so much demand that you're just creating higher lows, but you're still completing the ABC correction on this higher time frame wave 4 that we're in right now. So the question is, when it comes to this, let me put this into my harmonic. I've called it cipher. Doesn't matter. The question is, now we're in an ABC correction, and actually I can move that image to the question is, are we creating a megaphone to go up? Are we creating a diamond to go back down? And if we are going up, if we are in a megaphone and we are going up, then we were looking at an extended flat or an extended flat correction, because this could come down now. That's your A, B, C to go up. And coming down here to the previous bull market high might be overextended in the downside. It might be much flatter. So if that was to happen, you have this all-time high here now. Let's say you're in a megaphone let's say we break out, that would be your, that wouldn't be the next wave, that would probably be the B, that would be the C, back test, and then you're going. So then you have your ABC here, ABC here. As long as you, if you do take out this all-time high, you just can't come back underneath it, because that would look like a failed auction. That's bullish. Of all the corrections, I think this is the most bullish one. But in terms of snapping out of this kind of area of interest where we are right now, if you want to snap out, let me just rename that as extended. See, if you want to snap out, I don't know, probably you probably have to go down to build up the shorts and then squeeze out. So maybe that's the most bullish, a bullish harmonic. All the shorts will enter a lower high here. Lots of shorts are gathered in these pivots. Come down here, swing failure these lows, clear the liquidity, and then to the moon. I think that this is literally my preferred scenario, but I can't tell you what's going to happen. Good morning, DNTSAVEHER. Take a look at BHC. Okay. Any questions on this at the moment? We have the end of the month coming. Look where we are. We're above the previous bull market all-time high. That is pretty strong. Do we go back down to test this SR flip before we push up after we've completed this monthly candle? Or do we close much higher to just come back into the previous bull market high to go up? Like, we're in quite an important week this next week, so we have to see what happens. I mean, it's clear to see that we're in the bull run. Look, how many months of green candles have we had now? 1, 2, 3, 4, 5, 6. We've had 7 months of up, 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 up. Yeah. When's the last time we had that? 1, 2, 3, 4, 5. So we've had 7 months of up now. We last bull market, we only had 6 months of up. See, we had this little red candle here. If I look at the index, I mean, we're potentially looking at this actually. Like, when I'm looking at the comparison of where we are, I think we're here. I think we're looking at this. It looks like it. If the next month we get an explosion like that, it looks like this. It looks like we're going to space. That's and it will accelerate. You see how it accelerates? It just goes higher and higher and higher. It just gets steeper, and I think we just, that's what it looks like. So we could accelerate just all the way to 1 million. You have a couple of outer trend lines here that we have to pay attention to. This one here. Why is that gone to that? Trend lines always change colors. Just rename this. I like to rename these. Extended, right. Yeah. Right. You have a couple of trend lines. One is that channel that I've gone over in the past, but you can just take these two pivot highs. So the question now as we go up is what happens when we hit this first one. Okay. And then if we do to go up in the future, you'd have to this first yellow line that I have here. Where's the second one? Where did it go? Okay, let me just hide. Let me just hide these. And keep those. You would have to get past that. You'd have to flip that into support to get past it, and then you'll rock it, because you're then looking at a higher time frame trend line which has been broken and back tested, and these are the really bullish ones, the ones that are going up. So if you can break and back test a trend line that's in the upward direction, that's really bullish. It's kind of like the same idea of a megaphone but without the megaphone. Yeah, it's the same idea, but this is like a higher time frame megaphone, except obviously, you know, we lost the bottoms here. But it's the kind of same idea that if you break these upward slanting trend lines, back test them, then you're basically going to explode. And then probably look, you have a higher limit, and it would be this outer trend line from these last two pivots. That would be your outer limit. I think that would be the maximum range of of where the price would go to in this bull market, and it would probably coincide with some kind of higher time frame, either fib extension or trend based fib, once the third and the fourth wave completes. And so once we have the fourth wave, we can do like a trend, like let's say if this was to play out the way this I've suggested, and who knows, no one knows, this is just speculative. Let's say it goes up to there and then to here. Roughly. Then you'd have to see if there are any fibs that line up, and that would probably be the best place. At the moment, this idea doesn't line up anywhere. At the moment, it doesn't. You just have to see. We just have to see where the wave 4 completes. And wherever it does, you'll suddenly get an alignment of fibs, and that will probably be the target, because that's where people will sell, when you have an alignment of fibs on the higher time frame. All right, so that is Bitcoin. If there's no questions, I'm gonna move on to something else.